on TV, online and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Hi, I'm Chris Judd and this is Talk Your Book, and today we're lucky to be joined by Jun Bei Liu from Tribeca Investment Partners. Jun Bei, thanks very much for coming back on the show.
Thank you so much for having me. As always, I love to talk about stocks.
Now, most people would know your background in investing, but for those that haven't heard you speak before, tell us a little bit about the Alpha Plus fund that you run for Tribeca.
Absolutely. So the fund itself is a long-short fund focused on the Australian equities, and we've been around since 2006, and the fund itself is just under $1.4 billion. So all Aussie focused and run by the Australian boutique fund managers. And the fund itself has done incredible performance over the benchmark, which is ASX 200. And we're just saying earlier on that in the next couple of weeks we'll lock in the performance and keep powering on.
Absolutely. And tell us, which stock did you want to talk about today?
Look, today I want to talk about Life 360. This is a company that a lot of people probably have heard of. It is a tracking device business. It helps families to keep everyone tracked and knowing what is happening with the loved ones. It doesn't just apply to to individuals. And if anyone's like me, I track my car, track my pets, track my kids, just so that I know where everything is. Now this is actually a big business. It actually has been growing for many years, and it's gone into the US market, and it's been incredible expansion over the last few years in the US. Now, active user for this company monthly is over 60 million people there in the US. That's quite incredible. Makes it top 5 the daily active user sort of app. This is compared with the sort of big names like the Facebook and others. So incredible Aussie companies that's really sort of grown up and taken the world by storm across that tracking space. It's also in other markets. Now, we talked about before, of course, it's in Australia. It's gone into other markets like the UK, and the rest of the world have yet to sort of really gone into yet. So, a highly used app, increasingly more and more, other usage of this app. So, in terms of the data usage of, how people use the app, and it can be used then as adjacent revenue opportunities, such as for insurance and other opportunities. So, incredible growth story for this company. It recently just gone into the US and listed in the US as well, and making it long sort of runway for this company.
It's a business that you almost need to have kids to really understand it and understand its value. Our family's on it. And maybe before I got on it, I found it hard to understand why or how it was different to find my iPhone with Apple, or maybe explain to the viewers what is the economic moat they've created in terms of their tech offering.
Yeah, that's actually quite incredible, and that's a really good point. It's often a lot of pushback for this stock. I got to find my iPhone for free. Why would I use this one? This company actually started the tracking business way before Apple launched the AirTag and then Find My iPhone. So, they had that already in place. And what's so special about this company is that, I use all these devices to track my kids, because just to keep them safe. I've got relatively young children. So what happened is sometimes with the Find My iPhone, it's less accurate. And iPhone use certain technology where, it's trying to use other iPhone device to triangulate where that person is. So it's accurate, but not 100% accurate. Sometimes a little bit delayed in terms of data. Can be very frustrating trying to refresh and see where kids is, and it's 15 minutes old, and they could be anywhere. Whereas this one, live information, and provides information very accurate, knowing exactly where they are. Also, it gives you a lot of functionality of what they're doing. So in terms of, they're driving the car, for example, you know how, just to keep them safe, how they're tracking. So, a lot more functionality. And I just think, as parents, or whether families with pets and everything else, it's really useful.
And it's still a founder-led business. Chris Hull's founded the business, I think, in 2007. He's still the CEO today, and I believe the other founder is still a director of the business. Is that something you look for? You know, do you have a bias towards founder-led businesses in your fund?
Absolutely, particularly when they're in their infancy of growth, right? Even though, you know, you look at the share price, it's gone up a lot, but to me, it is still at the infancy of its growth. Founder-led is very important. You know, they understand what makes this business tick, and then they throw everything at it to really drive the growth where they believe is the biggest opportunity for this company. So absolutely. And
can you explain a little bit about the revenue model? They've obviously got a freemium model. Explain to me how that revenue model works and how many of those active users are actually paying users.
Yeah, see, that's the thing. That's that's actually a big opportunity for this company. With that's over 60 million sort of monthly active user, only 10% of them pays a subscription. And the average spend is between $100 and $170 a year. So that is actually not that expensive. So what the company has done very well more recent years is that to convert the freemium model into the more paid model. And recently they just reached that tipping point. In fact, they just announced today they reached that tipping point of 2 million users on the paid model, and I think that is going to be quite an important event for them, where you'll see the exponential growth across that the paid model.
So even if they don't get new active users, which they're getting quite rapidly, there's just the ability to grow revenue just by monetizing more of those users already on the system.
That's it. And for anyone who's been using this or using other sort of tracking device, once you start using them, it's very hard to use them, because it is so, you realize how important it is to keep everything you want to to be on top of safe, where they are, whether they're safe, where they should be, so it's actually very difficult for people to churn out.
And our privacy's already cooked, isn't it, really? Like, there's a bit of a pushback on that at the start, but then the amount of things that are tracking us anyway, I don't know if that's a huge issue. In terms of churn, how does it look like when kids get to 18 or in their early 20s? Is there a bit of churn with this business, or do families keep it on even once their kids have left the coop?
Look, there's always a churn, especially new users. For people who first try this product, there's usually quite a high percentage of them churning off. But for people who's been with the business for over 12 months, they generally stay on. And when they stay on, they kind of become, pretty active and regular users. So, we talked to previously that, they're in the top 5 active user monthly in the US. But if you actually compare them to, say, the likes of Spotify, their active user actually engage with their app over three to 5 times a day compared to one day. So, so it's actually quite a lot of communication engagement with the user.
And you mentioned some of the alternate revenue sources they're exploring. Can you explain a bit more what they look like?
Look, they are looking into different verticals. So insurance is one thing we talked about. If we know someone who's a very safe driver, perhaps the insurance premium does not need to be as high. It's a little category like that. Actually, not little. They could be quite meaningful sort of revenue stream. But the company is sort of just looking into all these other verticals as they monetize their huge active user base.
And they mentioned advertising as well. Is that a path they're looking to go down potentially?
Oh, absolutely. They absolutely already started, and this is what's really exciting. If you actually assume what they could do with with the amount of user they have compared to the Facebook, the company will be multiple times bigger. So it's early days of this model, and we do think that it is looking very, very strong. Obviously, we're not going to draw the blue sky, otherwise the share price will be multiple times higher. But we do think it's looking very promising, and this is really opening up additional opportunity for this company. So taking a step back, we talked about all these revenue opportunities, and they are actually very, very safe revenue opportunities, because they already got such a strong active active user base that they can monetize from. So it's not like a company starting something, trying to steal every day, trying to win new revenue or new throughput. They already got the base. It's really just how to monetize it properly.
And you mentioned just how many users they've already got on the system. Have you tried to put an addressable market for a business like this, and what you feel the total addressable market is?
Oh, look, I think it's enormous. So we have put, but in the U.S. market, overseas market, we have yet to put, to blue sky because the share price, we're already getting quite a substantial upside from the share price just based on the U.S. market and what it could do. I think at this point, the market share itself depends on how you measure it, because it's not making any money. Well, it's only 10% of the user base is generating revenue. So the growth from here is enormous within the US. And then the offshore market, we'll really have to see market by market as they prove themselves.
And you mentioned that they've recently listed on the NASDAQ. They're dual listed now. What were the motivations for them doing that?
Look, I think it's, founders being very, very keen to be listed on the US market. Previously have talked about it 12 months ago, I think. And, the market condition wasn't right. And now they finally got to happen. I think, the founder have recognized that, the US investors are more used to investing in companies with such high growth and such a big addressable market, and they eventually can take it to the next level. I think it's, while for the Australian investors, we're kind of sad to see portion of the company go, it's still very, very small component in terms of register, the shareholder base based out of the US. I think as the company grow, I think they have more optionality, I guess, in their hands, where they can sort of tap the US market as the growth continue its strong trajectory.
And in terms of valuation metrics, what are the things you're looking at most closely? Is it simply user growth? Is it multiples of EBITDA? How do you look to value a company like this?
Yeah, so user growth is important, but because as we talked about before, the company user growth, while it's very strong, but it's actually about monetizing this business. We want to see this business make money. So it's actually the revenue multiple that we look to, and it is probably the cheapest amongst its peers. They're in the US or any comparable, or even in the top five sort of social app over in the US, the revenue multiple is the lowest. It's sitting somewhere between 4 times and 4.5 times for 2026. So this company is very cheap relatively on that growth, on the revenue multiple.
And what sort of growth in revenue can you see happening over the next, say, 12 to 24 months?
Look, we see at least 20% growth, and this is still quite conservative in what they can achieve. So what we assume is really just simply the simple conversion of some of the adoption of the unpaid user into paid user. This hasn't really assumed a lot of those upside in terms of advertising model, which many analysts believe it could be quite meaningful. We're just giving it a little bit of time for the next year or two to really develop a proper model into that. But in 2 years, this company's growth is phenomenal.
And there's some tech businesses that frame themselves as a tech business, but maybe don't have the sort of operational leverage that you expect from a tech business. Looking at the consensus views for earnings per share for Life360, it really does look like it's got that operational leverage. I think you mentioned what revenue could do. I think earnings per share in that time frame's expected to double. So it does seem like a business that does have the scalable characteristics you look for in a tech group. Is that fair?
Absolutely, absolutely.
Awesome. Jun Bei, well, thanks very much for taking the time to come back on Talkie Book. Loved sitting down and having a chat with you, and Life360 looks like another compelling opportunity.
Absolutely, and hopefully by then the share price will be much higher.
That's Talkie Book. Thanks for watching, and we'll be doing it all again same time next week.
You're watching Ticker. We'll have more in just a few minutes.